Hey folks, Dan Frio here with your closing bell for January 24th, 2025. So what we're seeing on the screen right now is mortgage rates actually did nothing yet again today. What are they waiting for? Well, are they waiting for maybe President Trump to demand lower rates? That's not it. Are they waiting for the Federal Reserve? That's what's it. So the Federal Reserve's meeting in 4 days and 21 hours. What do we expect them to do? Well, my expectations are, and how I figure this out, is I go to the CME FedWatch tool, and that's what we're looking at right now. Before we go there, there's an interesting piece of information I want to let you guys listen to here in 1 second. But the economic news for next week going into the Federal Reserve meeting is basically nothing. We were hoping, I was hoping maybe you get one more piece of inflation. Maybe we get one more jobs report. Nothing coming out between now and the Federal Reserve's meeting. So on Monday, we have new home sales. That's really not going to do anything. The next day is durable goods and CB consumer confidence. That's not going to do anything either. And then on Wednesday, we have the Federal Reserve meeting. So what are they going to do? That's what our expectations are. There's an analyst that we was watching on CNBC. He's expecting multiple rate cuts, and I like this interview. It goes a little bit slow, but at the end of it, he gives his position, and I'll wait for this to go through, and I'll give you what my expectations are over the next maybe month or two, because a lot of people are calling us, should I refinance now? Should I buy now? So let's pay attention in this video, and then I'll give you my comments when we come back. So without further ado, let's get to it.
Let's bring in Stephen Stanley. He's Santander U.S. Capital Markets Chief U.S. Economist, along with our very own Steve Leisman, kind of keep us apprised of those rate cut odds. Mr. Stanley, I'll start with you. And is this kind of like good rate cuts because inflation's coming down, or bad rate cuts because of a slowing economy?
I think it's going to be a little bit of both. I think the labor market may weaken a little bit, and we certainly saw last summer that the Fed is very sensitive to that. So, that was a big part of the story that led up to the 50 basis point cuts that we saw in September. So that's part of the story. But I do think the inflation situation is moving in the right direction, and that'll give the Fed a little bit of freedom to move as well. Do
you think that we should put next week in play? It seems like almost nobody thinks we'd get a cut on the 28th. No, they've been very clear that they want to take a pause in January. This is all part of what has been termed a more cautious approach, which I think they'll pause in January, and then from there it'll be data dependent. So if I'm right about the data being a little bit weaker, then we could see another cut as soon as March, or if the data are stronger, then obviously they'll wait longer. Steve Leisman, what are the odds of a March rate cut here?
Well, actually, they're up a little bit, Kelly. I'll give you the data here. It's I think it was around 72%, if I'm not mistaken. Hold on a second.
Really?
I have it right here. It went up. I need my glasses, darn it. I'm very sorry about that. What we have is it's 28% in March. It's 72 when you get to June. That's the month we've been watching. What's interesting to me, Kelly, and I wonder what Mr. Stanley, as you correctly termed him, thinks about this. These numbers are up from after President Trump put a little pressure on the Fed, and I don't know if the market is reacting to that. Maybe it's a signal of where he thinks the Fed ought to go, or the kind of chair he'd put in place, or governor he might nominate if there's an opening there. But I don't know. It seems like the market may have reacted yesterday to some of the jawboning from the president to the Fed.
But still, let's call it about a 25%, 1 in 4 chance, Stephen Stanley, that the market thinks that they cut rates in March. Why is your confidence in the possibility of that so much higher than what everyone else is kind of thinking here?
Yeah, I mean, look, I don't want to press it too much, but I think for me, it's that I think the data is going to be a little softer. I think the real economy is going to be a little below 2% in the first half of the year, and the labor market maybe softens a little further. And I think a lot of that is simply just people waiting and seeing as the administration formulates its policies. One key point that I've been making is that I think it's going to take longer for the new administration to get its policies in place than the markets seem to believe. And so that means that the economy is kind of on hold, if you will, for a longer period of time.
I'm right in the bandwagon. This is the number one question I get from basically everybody that reaches out to us. They're like, should we do this now or should we wait? you don't know what tomorrow's going to bring. That's the problem. We don't know, could rates even possibly go up? They could. We just don't, I don't expect that, but you don't know what the next, basically what tomorrow's going to bring. So that was a fantastic article there. Let's get over to, like I said, there's really nothing on the calendar for the rest of this week. It is Friday. So let's see how the equity markets fared today. I think they gave a little bit of this back. So you have red across the board, which is okay. You got 140 down on the Dow. You got minus 17 here, minus 99 for the NASDAQ, which is nothing. You have the Russell down points, at 6. You have the VIX down under 14, which is fantastic. What's cryptocurrencies doing today? 105. It's still on a tear. Oil, let's keep our fingers crossed. Oil keeps going down. So we need oil below $70 to take out that inflationary piece there. So that's basically the news this week, folks. So next week, like I said, we're going to come back and we're going to give the Federal Reserve will be coming out. So what do I expect to happen between now and then, let's just say the next couple months? I'm on the same path as the young man that just had the interview. Until we really get solid policies from the administration and policies that we know that will pass, the markets are going to be on standstill. That's why basically all this week it was just a snore fest when it comes to interest rates. But when the data starts coming in, that's when you're going to see the reactions, good or bad, in the markets. So if you're looking to refinance, here's the piece of the puzzle I say now. Reach out to us. We'd love to navigate it and see how much money you can maybe save at this point. And then, based on what your closing costs would be, put yourself in a much better position today. And then, a year from now, you can refinance again. If rates come down, dramatically, like, this young man's saying he's going to drop 3 or 4 times over the next year. Well, you always have that opportunity to refinance in the future, especially in refinancing. The costs are a fraction of what they are when you're buying your home. So that's our lesson for today. So that's what my expectations are over the next couple weeks. I don't really think I think it's going to be just a yawn fest, but we'll see next Wednesday on what the Federal Reserve does. So who am I? What do I do? Well, my name is Dan Frio. I'm a loan officer. I don't do videos for a living. I just do this to help educate you guys when the time comes to maybe buy that first house or maybe looking to refinance. You reach out to me. I'm licensed in all 50 states as well as Puerto Rico. I work at ServBank, the number 10 largest mortgage servicer in the entire country. The unique thing about us is we're also a broker. We're set up with over 30 different lenders. So my slogan for this year is one application, one credit pool, and we're going to shop your loan over 30 different lenders. Who else can you do that with? That ensures you're getting the right program along with the competitive rates and fees out in the market. So check us out. You can go to therateupdate.com. There's 3 things you can do. You can hit the Apply Now button right there at the top. We usually don't like you to do that. We want you to either call in or schedule a consultation with me, Alan, or David. We all have 20 years experience. Most of the loans funnel through me anyways, and I give them my advice and how to do things. And then most times I might even call you behind the scenes just to thank you. So how can you reach out to us with even a phone call to beat the people that are trying to do consultations? We'll scroll down right through here. Here's going to be our 800 number right through here. So give us a call. You jump right in the front of the line. You can call us at 844-775-5626, or you can reach me personally at dan@therateupdate.com. All I ask you to do is if you just leave in a description or something, leave it down below. If you really want an answer to your question, you need some help, please reach out to me. Send me an email with your question. Let me know your name and phone number. I'll be the first one to pick up the phone, give you a call, and we'll chat through it and see if it makes sense. So thanks so much for watching, folks. Have a great weekend. God bless. Be safe out there. And I'll see you back here on Monday. Take care. Bye-bye.